Raghav, do you have a format in mind? I'm happy to impose one, or if there's one you guys more typically use, I'm happy to work within that.
Yeah, we'll get to that. I think the recording should be on right now. Yeah, okay, so the recording's on. Okay, my name is Raghav, and I'm the founder of the Startup Club. Today I'm going to be your host. Basically, we've had a huge hiatus in terms of our sessions. We used to conduct these sessions once a month. We've been doing this for the past 3 years, and we're coming back with a special session. Basically, we have a special guest with us. I'm going to introduce Ben in a bit. But this session is going to be kind of like a lighthearted interaction session. I want like each of you guys to kind of like introduce yourself to start with. I'll open up with like Ben's introduction, and then we'll have you guys introduce yourself. We can probably take like a maybe 3 minutes to each, and then we can kind of like branch off into like open discussion. I mean that's the plan that I had. Maybe Ben, you can come up with your own suggestion as to how we want to do this.
No,
Um,
I think that's a great plan, Raghav. I'd love to meet
mm,
everybody a little bit, and then we can open it for Q&A.
mhm.
And everyone's welcome to add me on LinkedIn. I accept everything. And happy to do follow up with you guys afterwards. So maybe what I would say is to everyone who's here today, don't feel pressure to feel like you need to sell me on your project right now. Like, because I'm very accessible on LinkedIn. And I've got a team that I work with, and we do. I've done several investments this year. I'm planning to do several more before the year's over. Like, don't worry about, oh, if I don't sell it now, I'm going to lose this guy. That's not what's going to happen.
Yeah.
So I'm very available. So let's focus more on what you guys are eager to learn today. Because if you have a question, somebody else probably has the same question. So I'm happy to hear what you guys are about. But let's focus this session as much as possible on Q&A and the educational process as well. Back to you, Raghav.
Right. So a little bit of context, and then like I'll set some house rules, and then we can get started. So you know, just to give you guys some context on why this session is kind of like really interested me to set this up was that we have like a kind of like a very peculiar ecosystem when it comes to like investors in India. And I've seen a lot of these guys talk about like how they invest in companies, and what I've seen is that like these guys rely heavily on heuristics. Like, are you an IIT graduate? Are you do you have like prior experience working with startups? And they kind of like look at these kind of like patterns. They look at like the patterns of all the startups that succeeded, and then they kind of like see if you fit the mold that they're looking for. And it's very difficult to speak to them about your vision. Like if you are like a forward facing, you have a vision and you want to try to do something like really unique and new. It's really difficult to sell an Indian investor on that, because these guys are like very trained on like old patterns, and they're trying to look for the same when they talk to somebody, and it's very difficult to talk to them about the future. At least this has been my experience, and I'm eager to hear like what other people have had experience on. So I wanted to like bring some global perspectives into this. Hopefully Ben can like enlighten us with his side of like he's been doing this in the US, so he can bring in his perspectives, and we can share ours, and we can kind of like have a learning experience. I think that's the best outcome that I would say. And I don't want this to be like a pitching contest. We're not trying to like competing each other to pitch to Ben right now, because like you said, like he's accessible on LinkedIn, so we can go do that. This is going to be more like a learning session where we kind of like exchange views, and we kind of like get a feel for like each other and the different ecosystems. And hopefully we can do this as a series where we bring in more global investors. Maybe Ben, you can help us out with this. You can connect us with some other people that would like for us to like meet Indian founders. um, so that's the context behind the meet and some house rules. I really want you guys to turn on your cam so that like we know who's speaking. We don't want, because like we live in the age of like AI bots, and we don't we don't want to feel like we're talking to some bot. We want to see the human behind these things, and I mean, it would be best if we could do this in an in-person meet, but the next best thing is basically to have your video on, so that like we know who's talking, and you can present yourself. So, and if you cannot, that's fine. You don't have to like explain it. So how we'll do this, like we I really wanted to like structure this around the number of people that we have. I think we have like 19 people right now. So we don't want to take too much time with the introductions. So I want to give like maybe 3 minutes to each. Um, and I want you guys to like start with your name, which city you're from, what does your startup do, and what's your background, and what is the thing that you're looking for right now, and try to be within 3 minutes. And before you get, I mean, and I want you guys to like get in the queue. you can raise your hand to get into the queue. And so if you guys are new to Zoom, basically you click on the three dots or the reaction, and then you click on raise hand to get in the queue, and you get to introduce yourself after that. Now, before we do that, I do want to let Ben introduce himself. Maybe Ben, you can start off with the introduction, and then we can get started.
Sure. Thanks, Raghav. Yeah, my name is Ben Wiggins. I'm a many-time failed startup founder with one successful exit as well. And so the joke I always make when I'm speaking to student groups or founder groups, primarily in the U.S. but internationally as well, is my LinkedIn says 7X founder, which is a badge I wear with pride. But everybody here can do the math on 7 minus 1 to figure out how comfortable I've had to get with failure. I've failed a lot and have been fortunate to have a little bit of success as well. I manage assets for a family office in Central Texas, a small single-family office. And I'm also a very active angel investor myself. I've written several checks this year, and I plan to write several more. I manage the founders group for a group of 650 startup founders in 40 different countries. So I love the work that you're doing, Raghav, for founders. And the founders group considers this group an ally, and we're friends of Startup Club. And I guess anything else about me? I'm a very active advisor and mentor as well. I love doing sessions like this. A lot of people said yes to me when they didn't have to, and I consider part of my responsibility to be to pay that forward. I do have an active mentor network that I work with, so I most of my one-on-one mentoring is done with members of the founders group, but I'm happy to do group sessions like this anytime. And if you have a simple, straightforward question, just shoot me a note on LinkedIn. I don't do deck reviews just based off of LinkedIn messages because that's a little bit bigger time commitment. But if you just have a simple, straightforward question about product market fit or GTM approach or something like that, just shoot me a note and I'm happy to answer it. So that's a little bit about me, and I'm glad to be here today. I'm very, very bullish on the India ecosystem, and I agree there are some gaps there that I'd love to be part of helping close. So thank you, Raghav, for having me here today. It's my pleasure to be here, and looking forward to talking with all of you founders.
Perfect. I see, Abhishek, you have your hand raised. I do want others to also raise your hand, get in the queue, so that we can manage the time effectively. Abhishek, you can go ahead.
Sure, Raghav. Thanks for having me in the conversation. So I am Abhishek, and I have 18 years of experience into the tech domain. And recently, I graduated from psychology. So I started thinking what to build. I'll become directly talking about what I'm building. Because see, mental health is still a stigma or taboo in India, right? So people are not ready to accept what they are going through. Down the line, what happens? They change. That's what we are building to detect the behavioral threat. And our goal is to make people aware where they are going. Like uh, one bad day doesn't makes you a bad person or give you angry personality. But if this is happening constantly, right? Every, let's say, last week you were something else, and then next week you become little angry, and every week you are getting more and more angry. So you won't notice until you become a full fire blown, right? So that's what we are trying to solve in the mental health here. And that brings me to like, I am curious about whether this is something we should be going into, or this is completely something that we should avoid. So this question is for all of the joinees we have, right? As well as to Ben.
Abhishek, just to clarify, what stage are you in? Is this an idea kind of thing, or is it? Have you guys
The
just started?
application is already ready. Like we have built this application. The website is ecosofmind.com without E. So like it's like drifting away. We like how do I explain this to you? Uh, we don't change overnight, right? Like we all have heard this statement from maybe our friends or maybe girlfriend or parents or spouse. You have changed a bit, or you are not the same person I met you, let's say 5 years ago. But we do not notice, right? We never acknowledge that, but eventually, but we are changed personalities over the time, and that's what we are trying to solve. Like you notice the patterns. We have built this application already, and we keep is this is without AI. We do not use any AI to detect the patterns, but what we are doing, we take your baseline, right, and we compare it with your ongoing baseline. Let's say you have been logging into our application for 1 week, and then we will be comparing with the subsequent week. Your personal baseline, no other data like AI is doing, because AI is trained on multi-billion tokens or parameters. So it will be comparing with other humans as well.
Okay, just to clarify, we have like 30 seconds left, but what is the business model like? Is this like a note-taking kind of like a thing where you kind of like make personal notes and the app gives you like a summary of things?
Okay, so we won't summarize. The business model is go to B2B. You see, the arbitration rate is very low in IT, especially IT. So if we know that which department, not the individual, let's say, uh, sorry, the time is running out. So we can continue later.
No, go ahead. Go ahead. Complete your sentence and then we can go on.
Okay, so let's say students or in any department, we see, okay, people are leaving, but we don't know why people are leaving. If we know, if we can mandate that to log your entries and we can have accumulated data from them, we can reduce this alteration rate and eventually helping the companies.
All right, we'll get back to more of this in the open discussion. I think Swasti is also has her hand up. Swasti, you can go ahead, but also I want to urge you guys to like get into the queue, raise your hand so that like you can be next. Yeah, Swasti, please go ahead.
Yeah, okay. Hey everyone, I'm Swasti. So also a quick disclaimer, if my camera's off, don't worry, I'm not a bot. I just can't turn it on right now. So okay, I'm currently pursuing a bachelor's in computer science from University of Delhi. And apart from my college, I'm currently working on a project called Next Her. It is related to like currently building to help more women discover opportunities, build meaningful connections, and navigate their careers with confidence. Well, I heard that this meetup wasn't about pitching, so and was more about learning. So I thought that's exactly my kind of room. So I'm not here to pitch any project. I'm here to learn and meet interesting people. And to build on something Ben mentioned about learning through failures and setbacks, I can definitely relate. I seem to be collecting internship rejections like Pokemon cards these days. So if anyone has any advice related to that or even knows of any opportunities, I would genuinely love to connect after this. Also, regarding my project, I would love to have some ideas or any suggestions. I have the portfolio link with me. It's deployed, but it's just the portfolio, not the portfolio. What? Prototype. Sorry. I do have the prototype, not the actual working system as for now. But yeah, we are working on it. That's it. Thank you.
Thanks, Swasti. See, Hidayat, you have your hand up. Hidayat, you can go ahead.
Yes, hi everyone. Good evening. So I'm building Bloot. I'm based out in Bangalore. So I'm gamifying the 10 minutes delivery in India. This is my third startup, pretty much in the last mile delivery space. I have pivoted a couple of times, and I have identified this gap where the hub managers or the warehouse managers of the quick commerce or the e-commerce, right? They don't know where is this supply, right? Which area, which pin code. Since the demand is fragmented across the quick commerce, right? And hence the supply is also fragmented. So through gamification, I get to know where are the riders actively engaged, the area wise, pin code wise. And in the warehouse dashboard, right, they'll be able to see the active riders on a daily basis. through the gamification, I get to know where the riders are actively engaged on a daily basis, right? On an hourly basis as well. And the Zepto, Blinkit, all of this quick commerce hub managers, they get to have the access in the dashboard. Say for example, if any cricket match is happening, right, the demand spikes up, so they'll be able to see in the dashboard where these riders, if the riders are really actively engaged in that area, in that zone, and they can push the orders to Blue Tap. So that is what I'm building, where I'm unifying the last mile delivery demand through the gamification. Thank you, guys. And I also have launched the first version. It's there in the Android Play Store. I'm currently working on the marketing part in Bangalore. Yeah.
Thank you, Hidayat.
Thank you.
Raghav, shall we go to the next person? You're muted, Raghav.
Sorry. Yeah. Sorry. I was just saying that, like, I don't see anybody else raising their hand. And Ben, this is something that I'll probably give you some context on. Like, usually, like, this is something that a lot of Indian founders kind of struggle with, is like they're kind of shy. And I've had to face this a lot, where you have to, like, really pep talk them to talking. I kind of like
Sure.
see that happening. Maybe we can kind of like go on with like an open discussion, maybe like something that you want to share your thoughts on. And yeah.
Yeah, I know how to plan from here. So what let's do is this. So anybody feel free to raise your hand and ask any questions that you may have. And if not, what I'll do is I'll look to see if there's a hand raised. And if not, I'll just start on a little bit. I'll tell you a little bit about my journey and kind of where things that I've learned over the course of a bunch of failure and a little bit of success as well. And I'm perfectly happy to carry it. But then if you either decide, okay, I'm ready to sort of talk a little bit about myself, or I have a specific question that I'd like to ask, go ahead and raise your hand. And otherwise, I'm perfectly happy to carry the conversation. But I see Lokesh, you have your hand up, so go ahead, Lokesh, whenever you're ready.
Yeah. Hi, good evening all. So I'm Lokesh. I'm from Chennai, and I'm into developing. I'm also into developing a product, and which is towards developing a finance product for micro gyms. Since in India there is more than 50,000 micro gyms are there, they are struggling to, even though they maintain books of accounts and everything, they maintain to make profit. So what I'm thought is, why not use profit first approach, which is famous in America, which can be used in India also. And this is a well-known and well-documented process which is available as books also, and profitfirstprofessional.com. In that also the process is available and professionals also available. I try to bring it into an application which can be used by micro gyms first. And for micro gym also there is a book is there, based on which I try to create an application which is called NetGains. So that has been developed, and it is being used by one of a gym in Chennai. And I want to know that how I can reach out to other gyms also and make use of this application, so that they also try to instead of losing their money, they can, like, using this approach, profit first approach in their business, they can make profit out of this one. That is what my thing. That is, I want to learn like how to reach out to other persons and distribute my idea, that they also can make profit out of this using this particular approach.
So I think the best place to start with something like that is always organic. Like, think in terms of where is the strongest relationship. Like, my experience is all of this stuff is relational, and I mean I'm probably not telling you anything that you don't know, but to confirm what you might already suspect, I would say think in terms of, like, in your network, who's the one person that is most likely to say yes to you, and then try to build your beachhead market off of that. Like, I love offering pilots for free or cheap, like those kinds of things. Just figure out a way to grab a teeny tiny bit of market share in order to get that first piece of beachhead market. So happy to talk with you a little bit more, Lokesh, in terms of how to think about that beachhead market. But thank you for the question. Amrita, I see your hand is up next, and then Ravi after that.
Yes.
Yes.
Yeah. Hi Ben, hi everyone. This is Amrita Keswani. I'm from New Delhi, India, and I'm the founder of Radian and its management consultant. So my background has largely been in strategy, transformation, organizational performance, value creation for private equity firms, and I have worked with companies on large transformation programs, operating model questions, performance improvement, and more of private equity related work. So across these experiences, I kept noticing the same pattern, and that's most companies do not struggle because they have no strategy, and in many cases, the strategy is quite clear. The value creation plan exists. Initiatives are also identified. KPIs are also defined, but execution still slows down, and like decisions take longer than they should. Ownership becomes unclear. Important initiatives compete for the same limited resources. Then there are dependencies between teams, which are poorly managed. So problems remain hidden until they finally appear in financial performances or in board meetings. By that time, or actually by that point, valuable time has already been lost. And this becomes especially important in private equity where time is not neutral. So that is the problem I'm trying to solve through Vadian. So Vadian is an organization execution risk diagnostic for private equity firms and their portfolio companies. And we help operating partners and portfolio leaders understand why important value creation initiatives are slowing down, not just whether.
Hey,
Yeah. So is there a question?
Keep going. I think
Okay.
someone unmuted me today.
Okay. So we help operating partners and the portfolio company leaders to understand why their value creation initiatives are slowing down. And we examine like 5 parts of that execution system. We have the entire framework there, and the idea is to bring together perspectives from the leadership, the employees, all the ground level reality, identify what specific execution patterns create risk, and connect those risks to the initiatives and the milestones that matter eventually to the investment thesis of these private equity firms. So yeah, that's what I'm building, and it's super early stage, and I'm not looking for any investment. I'm here only for learning. It's totally bootstrapped. I'm working on it with a CTO who is also a co-founder. The product is ready. Right now, I'm in middle of customer conversations and aggressively in sales. So yeah, that's it.
Thanks for sharing that, Amrita. And that sounds like a promising product. I'm interested to see where it goes for you. Thank you for sharing that.
Sure. Thanks, Ben.
Hidayat, I see your hand is up. Go ahead.
Yeah, hey Ben. So I'm in this gig economy space, right? So gamifying this 10 minutes delivery in India. So how is this 10 minutes delivery concept in US? Is it like, I mean, is someone has already been working on there to deliver items in 10 minutes, like the quick commerce, like how it's happening in India?
Like a pitch? I'm not sure I understand the question. Sorry.
Like here in India, we have this daily essentials that has been delivered in 10 minutes. Okay, you order it, and then all the daily essentials get delivered in 10 minutes. Okay.
Oh, I see. Okay. Yeah.
So
Let
how
me
is that
explain the
market?
all right, let me explain. So Ben, I'm not sure if you're aware of this company called Zepto and Blinkit. These are like big startups in India, and I think maybe you should like look into those. But basically, what you do is like you have they have their apps, and you can basically order groceries, and you can order pretty much like anything. Like even if you want like some electronics or whatever, you can order it on the
Okay.
app, and it takes like less than 10 minutes to reach your doorstep. And
Okay.
this is one of like the
like DoorDash Plus.
no, yeah, DoorDash, but the thing is that like DoorDash takes a long time, and also it's like expensive. And I mean, I little of experience like living in the US and also here is that like the US everything is like spread apart. But
Yeah.
in India it's like everything's like really dense. So in urban areas you have like they have these like dark stores, and then they sell these stuff on the dark stores, and everybody is like maybe like in a like maybe like a 15-minute access from these dark stores. So they can actually manage
Okay.
to do these, which is why it works. But in the US, it's going to be really challenging because like there's like long drives from anywhere to anywhere. So I don't know if it'll work, but maybe in like maybe San Francisco or somewhere like that, where there's like more denser But yeah.
Actually, there's Instacart there in US, and least I have got their groceries at by 25 minutes. So Ben, I'm not sure if you're sure about the Instacart model.
I've heard of it. I haven't really used it, but yeah, I know of Instacart.
Yeah, so it's like that. Grocery at the door, delivered at the door.
But which city were you in? Sorry, which city were you in, Amrita?
Oh, I was in Nashville and New York. So I lived in the US for 3 years and moved back to India last year. So I did my MBA from there and did work for there. So I have used Instacart a lot and DoorDash and Uber Eats. So yes, it takes a lot of time. In India, it's way too quick. I think it's 7 to 10 minutes. The model here is very different because you will find dark stores across in like every corner of the district. But in US, you're right, Raghav. It's really scattered and it takes time for those to get delivered.
Okay, and also I think it depends on the mindset. I guess right? People would love to go there and pick up from the stores, probably compared to people in India. I guess.
No, actually, there are like apps that let you buy groceries off the app. Somebody will go and purchase it for you, but they tend to be like pretty expensive. It's not like it's not like in India, but it's like very, very cheap. You can basically get a product like if you, I mean, they're subsidizing it with investments right now in India. So you can actually buy an item on Zepto or Blinkit, which would be cheaper than if you actually went to the store and get it. But in the US, like you have to pay the delivery person like a bunch of money. It's actually like only popular among like really ultra rich who don't want to spend the time to go to the grocery. People can't even afford the groceries. I think that's the situation right now in the US, where everybody's complaining about the grocery expenses. But yeah, maybe Ben, you have some thoughts on this, because like these grocery startups are like the hottest thing in India right now. Like they're the ones that are making big money right now.
Okay. Yeah, I mean, I think in the U.S., so there's the difference. So the two things that this makes me think of in the U.S. are one, there's a lot of curbside grocery pickup in the U.S., not delivery, but curbside pickup. And that usually mostly the grocery stores themselves will offer for no charge. So that, you can still get someone to go pick up the groceries and then just bring them to the curb, and they'll put them in your trunk and so forth, and they don't charge you anything for that. And the grocery stores do that, like, that's table stakes for them now. In terms of delivery, if you're talking about speed to delivery and like cheapness of delivery, I think primarily you'd be able to deploy that in urban areas, New York, Manhattan, downtown Nashville, like Amrita was saying, San Francisco, those sorts of places. Sorry, my wife is calling me once.
So Hidayat, I wanted to ask you a question. Like, did you have like a follow up to that? Like, were you going with somewhere with that question to Ben?
Sorry, come again.
No, you.
So what I was saying is downtown areas, I feel like is where this could work well. Tightly packed San Francisco, downtown Dallas potentially. Houston probably not. Everything is still too spread out, even within the downtown area. So that's my take on how this would work.
I have some thoughts on this, like, because like the thing is that like I don't think the US has the kind of like population distribution that would be able to afford this. But Ben, correct me if I'm wrong, but like there's a huge conversation about like affordability of groceries right now, isn't there?
Yes. Yes. I think I mean the challenge is, if you're talking about delivery, that's obviously an additional, and this may be what you're hinting at is there is, sort of the price of eggs and the price of gas and so forth is a conversation, but it's more a conversation among lower income households and maybe middle income households. So those are, not the type of families that are going to be paying delivery fees anyway, but that may be what you're pointing at.
Yeah, and then but even among the people that can afford it, they already have access to like DoorDash or some of the other apps that have established distribution, and it would be easier for
Yes,
them
that's
to
right.
get into it if they did have the market for this.
Yeah,
Yeah,
that's right.
yeah.
Okay.
But Hidayat,
Uh,
I wanted to ask you, like, did you have like a point to make about this question that you asked? Like, did you have
yeah,
anything
I
to?
mean, just want to check what's the area of interest when it comes to the investing. Ben, like, what's your area of interest? Like, do you invest? Have you invested in the gig economy space in the past?
Yes, I've invested in a marketplace before. It's an auto detailing marketplace in the U.S. I could potentially be interested in something like this. Marketplaces, anything that's straight software. I don't invest pre-revenue. But it is something that I would be open to.
Okay, great. Yeah. So, like, this is my third startup. My first startup was also was in a marketplace, something similar to a porter, but for the international delivery, where I built a social shipping platform to send the parcels by leveraging the travelers' unused luggage space internationally. I got a good amount of traction there, but the commercializing through the airport authorities was taking time to scale up, so I had to pause down that. And then I got into the last mile delivery in India, and now the marketplace. In this grocery or the 10 minutes delivery. Yeah, I would be happy to share the deck later with you, Ben. Yeah,
Okay.
thank you.
By the way, guys, like Ben has given his like LinkedIn on the chat. Maybe you guys can like send him a request, and if you want to connect further, you can go on with that. And Rohit, yeah, please.
Hello, everyone. Hi, Ben. So,
Hello.
actually, in the marketplace, I've been looking for a startup idea, and in the marketplace, there many people are talking about there is an issue with the cold start. So, how the marketplace are solving that particular issues when we are launching a product? So, the distributor and the person who using that needs to be posting the products and everything. So, as a startup innovator and builder. So how to solve that cold start problem?
I'm not sure. I couldn't hear the question clearly. I'm sorry.
Ben, he's talking about the cold start problem. Like, when you're creating a marketplace, you're trying to connect two different ends, and nobody knows about you. So, when you have like one side of the market on your platform, you need the other side to also engage them and to bring them back. So cold start
Right.
is when you need to have like enough of both sides to come in at the same time, but they both need each other to even want to come in. So this is the cold
Right.
start. Yeah.
Yeah. I
Yeah,
mean,
exactly.
the way to address that, it's essentially, it depends on which side you have. I mean, if you have one side but not the other, if you have the sellers, then you're approaching the buyer market from a B2C perspective. And if you have the buyers, then you're approaching the sellers, which is more from a B2B perspective. So the marketing approaches look a little bit different depending on which side of the market is harder for you to get. If you're, if you're going after buyers, I mean, it depends on how old they are. This is a social play, in my opinion. It's an influence play, and if your buyers are, if you're trying to get buyers, if they're really young, find them on TikTok. If they're, young to middle aged, find them on Instagram. If they're older, find them on Facebook. And if you're after sellers, find them on LinkedIn. And it's really like, and so I think it's just network play and influence play. Not to say that you should go hire influencers necessarily, but that's where you want to build your brand presence, relative to which side of the market are you having the most trouble capturing. I think that's the best place to start thinking about a problem like this.
Yeah. The thing about this is that I've kind of like had a similar problem with some of the other products that I was building. And the thing is that like you don't have access to any side unless you have both sides. That's the challenge about this, and also you would need like a pretty long runway to get enough of both, no matter which way you're going about this, you know. So there's just like a little bit of like insight from my journey on that. But I see Hari Raman, you got your hand raised. Please go ahead.
Hey, my name is Hari. I'm a B2B IT services founder. We have built a product on financial analytics platform on cloud. We are quite aggressively, taking it into the market and get the buyers and potential clients. We are largely present in India, but we are looking to expand in the global markets. Though this is not a sales question, but from an investment point of view, what I would prefer to have is like I want to understand perspectives about how I can approach an investor when I'm in the early stages of getting the product to the market and get more buy-ins from the global customers. One, that is more from an investment standpoint, and also for the investor that I bring in on board, how they would be able to take my product or the brand forward and see how they can support as part of my sales pipeline also. I mean, more as a secondary support.
So the answer to your first question is, and I'll like every founder on the call hear this well. The easiest way to get an investor in a conversation is to approach them as an advisor first. I get approached for money probably 12 times a day. I get asked for advisory help once every 3 months, cold messages. And I respond to every question that says to every founder. I respond to everybody anyway. But if I'm getting asked for money, I say basically if they just say, hey, I'd love to tell you about, I'd like to tell you about my AI company. I say, great, send a deck to benwigginsinvestor@gmail.com and let's take a look. But it doesn't get a bespoke response. If somebody says, hey, I've been following your content, and I think that you could be an effective advisor in this area, and that area. I need help in those areas, and I'm willing to discuss an advisory position for you. I will think about how I'm going to respond to that founder every single time, because they took the time to get to know me, and they didn't just say, hey, here's a rich investor, I'm going to ask him for money. So think about the investor from, like, every investor that I know, every single one also does advisory work. We don't talk about it, but everybody does. And every investor is always looking to increase the odds of an exit, get to watch the founder for a little bit before they write a big check, and juice their equity when the exit does happen. That's always a good deal for the investor. So founders should approach investors more as advisory opportunities first. That's the answer to the first question. Now, the second question, you were talking about it sounded like what you were asking was about how how the investor can help with distribution or something like that. I wasn't sure I could fully understand the second part.
No, that's correct. So what I see, a lot of things that I've heard from investors are like they also support to pitch your product to the potential buyers, and they would support in that avenue because they would have network of people they would have already invested, or probably they are influencing. So that could probably drive certain things. So just I wanted to understand, will that support?
Yes, no, that's absolutely right. That the investors do like, and this kind of plays to what I was talking about a moment ago. Like every investor, unless they were born into a bunch of money, which is very rare. Most of the time, investors became investors by being successful either in corporate life or as startup founders themselves. They have some kind of expertise almost every time. And they would love to put that expertise to work supporting your company. So whether it's helping with distribution, whether it's helping with partnerships, whether it's helping with operations, whether it's helping with finance, like investors love to do that kind of thing. So so in a way, like both the answers to both of your questions tied together.
Absolutely. Yeah.
So
Yeah, just
that-
one addition, Ben. I think I really liked your idea of getting an advisor uh, more than an investor. Eventually, you can get the advisor to be an investor potentially, if in case he has the financial capability. I think I like that advice, and I really got impressed. And I also get a perspective from you on the second question response as well. But my follow-up question to the first one is, do you have any suggestion to get such kind of advisors? Because I'm active in LinkedIn. I do post, I do reach out to quite a few people, but largely I have reached advisors to support me on the technology side, but not on the investor side. Do you have any suggestions on that?
so I mean, it's really I'm not sure why people aren't responding on the fundraising side. Most of the I guess I do see how that's going to be harder to find because most investors are coming from a corporate position, which typically did not involve as much fundraising. They may be able to help with sales and marketing, but not as much. You know, like I mean, my primary value add is fundraising, but
Okay.
so
Okay.
I'm happy to have a conversation around that. But yeah, so
Yeah.
I'm not. I guess I'm not sure why, but what I would do is I would do the same thing that you're doing with anybody else, and I would say, hey, I'm seeking advisors. I am willing to discuss equity. What you do is you offer them equity, and then you just put it on a cliff in a vesting schedule. So if they don't, if they show up and they're not doing anything, you can just turn them loose before the cliff expires. But yeah, no, I'm not sure why. Not sure why you're not getting nibbles on that, but I do. My primary advisory role is fundraising support. So
Wonderful. Okay.
yeah, happy to talk more about that.
Thanks a lot. Yeah, really appreciate, Ben. Thanks for your advice.
Yeah, I mean, I just had a follow-up question on what you said, Ben. Like, you're talking about like advisory role, and that sounds like a like a formal position, right? Like, are you looking at like equity offerings or something like that, or and I also have like another question on this, like I mean, if you're advising people to like reach out for advisory, if you're looking for money, wouldn't that like bring in like a lot of facetious interest, like the people who actually want money, but they come to tell you that they want advisory.
Okay. No, I think Raghav, I think you're correct. So there is no structure defined in terms of how to get the advisor on board, more on a monetary terms or on the equity terms. I think that can be worked out, depends on the advisory's capability and advisory's influence possibilities and all of that. So that can be worked out. Maybe I'll reach out to you offline, Raghav.
No, I wasn't asking you, Hari. No, I was talking to Ben.
Yeah.
Okay, sorry. Okay.
No, that's fine. So yeah, it does. I mean, there are some people who are not sincere about this. But what I tell them is, I'm not going to write a check until I get to watch you for a while. That's just how it is. And you're going to need to issue me equity for the advisory work. You can put it on a cliff and a vesting schedule if you want. So if you discover, hey, but Ben's not doing anything, you can fire me. But I'm not going to write you a check until I get a chance to watch you operate for a while. And so if you're like, so if you said you were looking for advisory help, but what you actually want is a check first, forget it. Like that. And if that means you're not interested in talking to me anymore, then good luck.
Right. And also like, do you have like and Ben, do you have like a number on like what kind of? I mean, how early do you guys like talk about the figures on the equity or whatever? Like, is that something that's preset, or do you guys like figure it out on a case by case basis?
Yeah, usually what I'll ask for is something like 2%, 2.5, and then on a vesting schedule. And then the other thing that I ask for though is once the business gets post revenue, I do ask for a retainer as well. And I've got a whole team, so there's a difference between an advisor and an advisory firm. So I have an entire company that is it's my company. And we do LinkedIn content, we do investor relations newsletters, we do investor intros, we do all of that stuff. And the whole idea is investor readiness and running your fundraising running your fundraising process like a sales campaign. You need to have your investors in your CRM. You need to have, like, you need to be managing your investors like you manage prospects on the sales side. You need to be sending out regular updates on what's happening and, you know, what's good. What do you need help with besides money? What is your current financial raise? All those kinds of things. Investors need to be hearing from you regularly, every 6 weeks or so. You know, like VCs reach out to me in my family office regularly for, you know, with LP opportunities, which is basically just, hey, give us money. And the ones I'm most likely to eventually write a check to are the ones I hear from regularly. Are they the best ones? I don't know. Maybe not. They're the ones I know best. And all else equal, people want to do business with people they know and people they like. And all else not so equal, people still want to do business with people they know and people they like. And so, you know, that's that. So I typically ask for, you know, 2.5%, and then either, normally it's a retainer after the business gets post revenue, like reasonably post revenue. If you're making $5,000, I'm not going to take 2,000 of those dollars. But you know, once the business gets to a reasonable level of revenue, that there's a retainer for these ongoing investor relations, because you're going to need to raise money again. It's a very rare company that just raises a seed round and then never is able to bootstrap from there. That does happen, but it's not, you know, it's not a common thing. So they are going to need to raise money again.
All right, we got like maybe like 9 minutes left, and I just want to make sure, like, you know, people understand this. Like, you know, you guys, like, 9 minutes. If you haven't spoken, if you haven't, like, you know, you had something to say but you haven't been able to say it, now would be the time. And I want to get like as many like new voices in as possible. And also, Ben, I also wanted to ask you a question about, like, you know, what is it that made you interested in Indian startups or founders? And that's something that I want our audience to listen to. Yeah.
Sure. So I guess the thing that interested me about India was I hear from a lot of founders from India on LinkedIn and on Reddit and at the founders group as well. India and you know, sub-Saharan Africa, and so I'm fascinated by the opportunity there, and also sort of what seems to be a you were talking about how, Raghav, how there's kind of a bias for IIT graduates and you know, people who have, you know, like prior institutional experience, and it sort of seems like a system where the rich get richer, and so that's so being able to help bridge that gap was one of the things that excited me the most about India in the first place. The idea, like, there's all of this, you know, there's a lot of American capital available for capable founders, and being able to figure out a way to bring that into India in a way that the American investors feel like their capital will be well taken care of, and that they're, you know, that they're not going to get scammed, that's really important. You know, and I that's something that I have a lot of interest in. So I think Indian founders are really, really talented and very capable. So.
Perfect. I think Abhishek, you had your hand up. Go ahead.
Yes, like as of now, since I am working in the mental health sector, right? The most challenging part is not the investment or the technology. The challenging part as of now I am facing in India is getting people used to it. Like we often say that I am doing well, whereas I am not doing well, right? People hardly goes to psychologist. That's what the problem is. And I want to understand, like, how do we reach to the audience or the users? Because people really do not want to believe that they have some issue. Like, I don't want to label issue as issue, but behavioral changes starts from very small thing and can turn it to severe mental health issue. Am I audible?
Yeah, you're audible. Abhishek, the thing is that, like, you know, there is a cultural issue as well. Like, you know, people aren't used to seeking professional structured help with these things. But also among the people who do, they would want to go with something that's like more reputed, because like it's a very personal thing, right? Like you don't want to do something experimental on yourself. You want to go to somebody who's a reputed psychiatrist or something like that. And also when these kind of things, like word of mouth really helps, because like you people tend to like trust other people that come as a recommendation from people that they trust. So your problem is like, it's not, you don't look at the bigger cultural problem about it, but it's like more like, why should they trust you is the question. And that's the thing that you probably need to answer. But Ben, you have some thoughts on this?
May I add something up over here?
Yeah, sure.
Okay, so what I believe that I have a lot of friends who are opting for therapy, etc. What they feel that they don't think that they would go for someone for a therapy where they can't open up. From what they have experienced is that a lot of therapists just don't even feel like listening to them. So it's very hard for them to again go back thinking that a therapist or a psychologist would solve their problems. I guess that's because of a lot of inexperience or not so interested in solving or actually helping people.
Firstly, can I interrupt you for this? Because see, like therapy is not one session. It takes around 5 sessions to know the patient, and maybe more than 15 to like it's an ongoing process.
No, I do
So
agree.
Guys, hold
I
on,
do agree.
hold on. We have like maybe 5 minutes left, and I want to make sure that we have like some closing thoughts from Ben. And I want you guys maybe Ben, you have some thoughts on this particular thing. I don't know if you have a hard stop at in 5 minutes, or if you can spend a little more time with us. But I just wanted to ask, do you have a hard stop in 5 minutes, Ben?
Yeah, I do. My wife just put our daughter in the car, so I do have
Okay.
a hard stop in 5.
All right.
But I understand the problem that's being, the problem that's under discussion, and I wish that I had like a pat answer to it that I would say this is how this is going to go, but I'm actually not. I don't think there's necessarily an easy answer to this question. So I'm happy to discuss it further and like keep kicking it around as the product gets built, but I don't know if I can. I can't. I can't wave a magic wand on this one.
Ben, I have already sent you LinkedIn request, and we can discuss more, or I'll drop you like what my thoughts are on the same, and we'll share the website link. If it seems like, see, I want to understand your perspective more than interested in the funds. I am interested in funds, but not as of now, because I still want to understand whether this makes sense or not, right?
All right, and I'll advise the same to everybody else who wants to get more of Ben's thoughts on things. Like send him a LinkedIn. He has his email on the chat as well. And Ben, I would like to know if you're interested in like setting up more of these. Like maybe we can do another session several weeks down the line or whatever. Yeah, I want to connect you with more people, more interesting ideas, and more interesting founders to collaborate with. And yeah, do you have any ideas on like other kind of like collaborations that we can do?
Sure. Yeah. I mean, I'm happy to participate in one of these again. Yeah. We can talk about the timing.
Sure.
And I know we had some discussion before we came into this one about timing as well. But yeah, in general, I love doing sessions like this. So thank you all for having me. You're welcome to reach out to me on LinkedIn. If it's decks or meetings, if you're asking for a meeting or a deck review, I'm going to redirect that to my email. And my investment team will be part of that process as well. But yeah, I'm happy to answer questions, and I do an open office hours on the founders group on Thursdays at 11:30 a.m. U.S. Central Time every Thursday. Occasionally I'm out of the office, but otherwise every Thursday I've got an open office hours and I answer questions there as well. Yeah, please consider me a resource, and thank you for having me. Is there anything else I can be helpful with?
No, thanks a lot, Ben. Thanks for your time. We'll definitely connect back again, and we'll see like how to make the collaboration work better. Thanks a lot for everyone for joining in. We'll catch you guys again. And also like go to our website startupclub.live, and you'll see links to our YouTube channel as well as on the Telegram, where you can join and we can have a discussion there. Thank you everyone. See you guys.
Thanks.
Thanks, Raghav.
Have a great day.
Yeah.
Thank
Bye.
you, everyone.
Bye.